How you doing? It's Khoa here. In this video, we're going to be covering a really awesome strategy by Ray Dalio. It's called the all-weather portfolio, and I came across this strategy, this investment strategy, in Tony Robbins' book, Money Master the Game. So if you haven't seen this book, it's a pretty thick book. Look at the size of that. The reason why I'm putting it there, so I want to show you the pages a bit later, but it's a pretty big book. Tony Robbins, he interviewed a whole bunch of hedge fund managers who's managing billions in portfolio, and they're doing very well. And Ray Dalio has got a really another amazing book called Principles. I've already created a video on his Principles book. Highly recommend to check it out. In this strategy, the all-weather portfolio, is that Ray Dalio talks about his way of investing in particular stocks and bonds and so forth, and this is designed to help you weather through all of the different seasons in the stock market, such as recessions, depressions, rises, bull markets, bear markets, and so forth. The reason why I want to share this with you is that back in 2018, I came across this principle, I invested in it, and I did make money. So this is not financial advice, you have to go see a financial advisor, but from my experience, I did make about $7,000 on using this particular strategy. I pulled up my money. I should have kept my money in there, but I'm just saying that I did get results from this. Okay, so let's have a look, shall we? So basically it looks like this. Okay, so this is the all-weather portfolio strategy. So Ray Dalio talks about you have to allocate your funds into these different sectors. So the 30% of your allocation goes into stocks. So he recommends to invest in the S&P 500, such as the Vanguard S&P 500. So 30% of your money goes into stocks, and the reason why it's that small percentage is because stocks tend to rise and fall pretty quickly, and they are pretty risky as well. So 30% of your wealth goes into stocks. 15% goes into intermediate US bonds, and the other 40% goes into long-term bonds. You might notice that long-term bonds is 40% and stocks is 30%. Why US bonds and intermediate US bonds? Just rise during the GDP growth and everything. I won't get into the technicalities of it, but these are very stable investments, right? So I've invested in, once again, Vanguard. You can get these two bonds off Vanguard, and these are designed to help weather you during the storm. So he's also allocated 7.5% and 7.5% in commodities and gold as well. So the reason why you put money in gold and commodities is because during the inflation, these areas tend to increase. So if there's a downturn in the economy and there's inflation, these other areas may decrease, but this will increase. So this will also weather you during the storm. So you can see that it's been carefully thought out, and it's designed to just keep putting your money into these sectors, right? And then over time, it will just tend to just increase. And and it does work, so there you go. I also want to show you Tony Robbins' website. So if you go to Tony Robbins, so go to TonyRobbins.com, there's an article called The End of the Bull Market, and it just goes into this in a lot of great detail. So I highly recommend for you to check it out. This is the summary. So it talks about the different allocation models, bond risks, and so forth. It talks about inflation, deflation, rising economic growth, declining economic growth, and eventually talks about growth and inflation. So it goes into the whole strategy in great detail. So I highly recommend for you to go check it out. So if you like this video, make sure you hit that subscribe button, and I will see you guys in the next one. Cheers.